Hey, hey,
How's it
dude.
going, Jedi? How are we doing?
Finding you, Ben. So,
I'm
so
I'm doing all right.
cool, man. So yesterday you messaged me on Discord, and you're like, "So when are we streaming again, bro? When are we streaming?" And I was like, "Yeah, when are we streaming?" And yeah, I think it was obviously due. There's obviously been quite a bit that's been going on. And
Yeah.
this is the first time I've actually done a stream solo. Normally I've got Grant with me, so I'm kind of like
Normally I have
uncharted.
Grant with me too.
Yeah, so
He's
it's the
our
first
he's our
time
he's our safety
he's like.
blanket.
Yeah, totally, dude. So let's see if we can make it work. I'm sure we will. We don't. I mean, just for the viewers and the listeners, we don't have anything planned. We just decided
Nah.
let's just chat about what's happening. I think from a macro perspective, I think obviously you've got quite a lot that you've been having on your mind, and yeah, let's take it away. Do you want to share screen now, or do you want to chat about
Sure.
something
We can
before?
we can just chat for a little bit and then I'll pull up the screens. But so this last week, I mean, we can just kind of go over some of the stuff that's happened in the crypto and macro world. Obviously, you had the Solana uh, issues where it was the Slope wallet had basically been transmitting everybody's seed phrases,
Fuck, dude.
and yeah, that's
Crazy.
absolutely wild. Um, so I mean, it seems to have hit mostly smaller wallets, but that makes sense because I don't think most people with millions of dollars are going to be trusting it to some random Slope wallet. I had never even heard of Slope wallet until the other day.
So we did a market update this morning, just kind of looking at that myself, Dan, and blockmates and grants, and we just actually noted like who the core investors were with Slope, and I was actually quite shocked. I mean, it's who's who in crypto are involved with Slope, so it's not like a bunch of randoms. You got Alameda there, you've got Jump. There's a whole lot of guys that are involved in it. So obviously
Nothing,
quite a
nothing
yeah. I
bad has
mean,
ever happened to jump. What is it? Jump Capital? Jump.
Jump
Nah.
Capital, I think, yeah. I mean, it's just been really
Yeah.
like, um, yeah, it's been a shit show. And I think it's,
Yeah.
like we said this morning, it's like, with Solana, it's 5 steps forward and, 2, 3 steps back. And it's really unfortunate because I'm not anti Solana. I'm not, I mean, my stance on things. I don't believe that there's one road to Nirvana. There's everyone's got a role to play. I think Solana's intention was always to kind of like fulfill the financial aspect, the TradFi thing. I mean, there's amazing projects that are happening on Solana, and I think it's just really unfortunate that this is happening. I don't, a
Hmm.
lot of guys get a lot of satisfaction around, you know, projects and ecosystems that fail. I don't see Solana bullshitting people. You know what I mean? It's not like there's a lot that can be said for Cardano and just all the vapor that's gone on around that. I know I am contradicting myself a little bit here, but what have they really contributed to the space? I don't know of anything that's significant. Whereas
Yep.
Solana's been around for a little over a year, and I think they've done more. Sure, they've done a lot of bad things have happened, but
But they've they've also done a lot to push the envelope of like bringing this stuff to the mainstream. Like they just opened the Solana store this week, which if you haven't seen the pictures of it, it looks like an Apple store, but
yeah,
like kind of displaying um NFTs and various things, and I think they're going to use that to sell their Solana phone. And um I think there's also something to be said for having a phone that is made with interfacing with crypto in mind, because like as somebody who has used their iPhone before to do crypto things, like it's not a great experience. Like in general, every time
yeah.
I try it, I'm like, I'm gonna go do this on the computer. This is too slow, too clunky. The the browser within the MetaMask and on on the iPhone is just trash.
Yeah,
And and I haven't done anything mobile on Solana, but you know,
so the Solana experience from a mobile perspective is definitely a lot easier than the MetaMask experience. I've done both. I haven't been able to get a transaction to go through on MetaMask and an iPhone with ease. It's actually really difficult. You've got to use Chrome. You've got to like do it in the correct order. It's a pain in the ass. And I mean, it comes back to, how do we kind of like bridge the divide between using a laptop and a PC versus a mobile. And I think there's the projects that, in my opinion, are the ones that are actually going to do really well going forward are the ones that are considering mobile above PC and laptop. And I think that, I mean, for me, that's like, it's horrific because I'm a big PC and laptop user. I run multiple screens, sometimes 6 at a time. And it's not because I'm a shit hot trader. I'm a terrible trader, for the record. I'm terrible, really, really bad. So that's not what I do, but I do a lot of stuff. We're writing articles, we're watching charts, we're doing a whole lot of stuff that requires that kind of stuff. And to be able to do like fundamental transactions in the blockchain on the mobile phone is just so foreign to me. But if you look at what Change Finance are doing, have you actually seen what Change Finance are doing?
I haven't looked into that one. No, I know it's like CHAING, that one.
Yeah, that's the one. So
Or
that's the
yeah.
one. So we had DJ on our show last week, no, a couple of weeks ago, the CEO of Change. I mean, these guys are just way ahead of the curve, in my opinion, even though they're not. They're way ahead of the curve in terms of where crypto is. But in terms of where, the general consensus around transacting on the internet with a mobile phone. So look at the Chinese context of things. China, people do everything on their mobile phones. DJ was saying that there's no consideration around laptops and PCs in terms of getting things done. You pay for your stuff on a phone, and I think we already do that. But when it comes to crypto, we've got this idea that we've got to use our laptops and our PCs, whereas the Chinese context is your mobile phone goes with you everywhere. Therefore, you need to be able to do all the things that you need to do on your mobile phone. And they've
Yeah.
built this app. Dude, this thing is insane. I mean, you can do cross-chain trading, swapping, and you don't even know you're going cross-chain. That's how seamless it is.
And
I think there's a lot to be said for that, and I think people that are developing stuff right now, they need to pay attention because that's where it's going.
I don't know if you saw Up Only this last week, but Zuko was talking about the fact that in the future we're not gonna know what blockchain we're on. You're just
Yeah,
gonna like as long as the experience is good, it's gonna be completely opaque to the user what chain you're actually functioning on. As long as it works, you won't care, and it'll be all about the interface, all about just the user experience. And the user experience in crypto is not where it needs to be for it to
yeah,
be the actual financial system that everyone is relying on. I mean, aside from people's wallets just randomly getting drained, you know that's that's also not ideal for a prime time financial system. But I mean, nobody said building this stuff out was going to be easy though.
yeah,
And
absolutely.
that's the thing. It's like you see all these haters on Twitter, that the people that are just always against crypto and stuff like that. They go, "See, look, this is why this is stupid and why you shouldn't do it." But like I think the optimists out there, such as myself, uh believe that what is being built is important, and that just because it's difficult to do it in a way where people aren't getting hacked to the tune of millions of dollars every week, uh, doesn't mean it's not worth doing, because the ability to have all this stuff in a decentralized permissionless uh, system is worth all of that. I mean,
Yeah.
and there's going to be a lot of lessons learned. And honestly, I think while there are there's all sorts of like other chains and stuff being built, and I'm all about the multi-chain. I don't think that there's necessarily one chain that's going to rule them all. However, I think it's hard to overestimate the advantage that the EVM has over these other chains, and because if you, I mean, just from the purely like experience of writing in Solidity, like you take all those man hours of hacks and failures, and I mean, you have all that experience to draw upon in Solidity. I mean, there's a certain amount of Lindy just to the fact that there's been so much development on the EVM that we have learned of what not to do largely. I mean, it cost, hundreds of millions of dollars worth of hacks, probably billions actually at this point. But I mean, it's a lot for another like chain to try to overcome, especially some of these ones that are using other languages like Starknet or Algorand, or I mean even Solana. Solana relies on Rust, so like there's you don't have the code base that you have that you can draw upon for development. And so
Yeah.
if you're choosing to develop a new app, I mean, there's a definite advantage to doing it in an EVM compatible chain because you can just copy paste stuff
Mm.
that is.
So what do you reckon? I mean, in terms of, I think what's really important right now is that we're at a point where there's a lot happening in the space. Like just off the back of what it is that you just said now, is that there's a ton going on. Like we went from we've been busy. From a blockmates perspective, we've been busy. We've had a lot to consider. There's been a lot of interest from projects approaching us in terms of covering what it is that they're doing, and we're obviously very discerning around what it is that we spend all this time on. If you go and do a research, so for example, like one of the very successful articles that we wrote recently, and I'd say it's an expose around GMX, is that we took something that was fairly complicated and we turned it into something that was very digestible, and that's what Grant does really well, and what he's empowered the team that we work with to take all this information and to distill it in such a way that it still captures the essence of the project, and so we get to see a lot of projects that that aren't great, that are really good, and that are amazing. I can't say in the last 6 months that I've seen many projects that are just garbage, because the guys are actually forced to step up, so we don't have this copy and paste scenario. There's a lot of like innovation that's going on in the space, and this morning we actually discussed like liquidity provision seems to be, for me right now, the next big play for the future. Maybe in a month's time, maybe in 6 months' time, maybe in 2 years' time. But the next play, I'm going down on record and I'm putting my hand up and saying, guys that are doing liquidity provision cross-chain in the most efficient and the most cost-effective means possible are going to be the guys that are going to shoot the lights out, and more importantly, are going to land up being sustainable. So the point that I wanted to make around this thing is that we've gone from a very quiet scenario and things have gotten very busy, despite the fact that we're of the opinion, well, I'm of the opinion that this is just a relief rally and we're going to have to revisit these lows again. That's my thesis. There is a little bit of kind of like sideline bitterness that's in that, but at the same time, I think it does make
I
sense,
hear that.
so I wanted to kind of like just investigate, like what's happened in the macro scene over the last 10 days or so, and how has that contributed to what it is that we're seeing in the crypto market at the moment? I mean, what is your opinion on that? I know it's quite a big question, so yeah.
From a macro perspective, I think so. This whole thing sort of pivoted right when the Fed announced their 75 basis point hike, but for whatever reason, the market interpreted that this 75 basis point hike as being more dovish because they got rid of forward guidance, which means that they're not going to commit to anything in the future. Not that those commitments were ever worth a damn in the first place, because they've gone back on them several times in the last few months alone. But there's a few things going on in the background here, like in the euro dollar market, and we can actually switch over to my screen. Let's see. Yeah, let me pull that up here. So I don't know if you can see, let's see, over on the right here. Let me pull this over. So these are all the euro dollar futures right here. And just teaching you how to fish a little bit here. So these are all the ones for 2022. And what these tell you, though, is, so like this is March 2023, this is December 2022. And what these tell you right here, this is the one that's lower than all of these other ones. And what this is basically saying is that December 2022 is basically when the Eurodollar market believes that rates will have peaked. And it's showing like a terminal rate of like right around 3.8. So, you know, after that, it's basically saying that things are going to turn around and start going the other way, and that.
So is this actually? I mean, so please excuse the dumbass questions that are about to follow, because this is completely foreign to me. This is the first time I've ever seen this, and the question is this almost like an indicator into the future of what the market expectation is? Is that what this is?
It is. I mean, it's really a culmination of a lot of things, because like I've sort of explained this before, but like the euro, like, because banks overseas don't have here, actually we can switch back to my camera. Oh, actually, you can see my face. All right, we're good. But because banks overseas don't have the access to the Fed, they can't just get reserves from the Fed every time they need money. They can't borrow from the Fed. So what they have to do is they have to plan these things out ahead by securing dollar funding, sometimes in the futures market. So like if I know I have a big payment that I have to make, 3 months into the future, because I have promised to pay for some swap or whatever. Like, it doesn't matter why I need the money, but all these banks and non-banks overseas, they need access to dollars in order to keep their operations going. And so this Eurodollar market is basically where people buy futures to help protect their ability to get those dollars. And so there's hedging and stuff that happens, and like it's a very deep and liquid market with a lot of players doing a lot of different things. And so what these things aren't necessarily able to predict the future per se. However, they do tend to reflect the, like, if you go back and look at like the December, actually no, let's go back even further. So here is the chart for let's see, actually.
I mean, that chart looks like a proper shitcoin, doesn't it? I mean, that's DeFi
Look
all
at the
over again.
look at the scale we're on, though. You gotta keep that in mind too.
Fair enough.
But like, as you can see, let's see. Actually, let's take a look at the 5-year. All right. So like back in February, they were showing like 1.5. Actually, this is probably not a good one to do. Let's do the June one, because these are going to go back further, because the monthly ones don't go back far enough. But so you can see right around the time all your shit coins ate it, back in October 2021, this chart started showing, we aren't going to have low rates forever. Because like you can see it was pretty much pegged at like 0% interest rates right here, because you're at 99.8. So that's basically
0.2%.
0.2% interest rates that it's, but, and then right there, it's like, oh shit, this has turned into a casino. The Fed's going to have to reel this in. And, and, you know, it starts falling off a cliff a little bit. And then, you know, you get to the end of December and it starts falling off.
That's a full bungee jump right there.
Right. And then it just keeps going as like the rate hike stuff. So like this was predicting the rate hikes before the rate hikes actually happened, because, you know, people were starting to hedge for that stuff. And like, so we've kind of hit like a little bit of a bottom here. Starting in like April, we hit a little bit of a bottom and it's starting to kind of like maybe turn around. And so a lot of people are looking at that going like, I think the Fed may not be able to raise rates anymore. And that, I think that's part of where this narrative has come from. Now, the futures markets aren't perfect. You know, they don't, they will sometimes come to realizations a little, you know, but I don't know. They're not perfect, but they're better than just about anything else out there. And so that is sort of the bullish, that is where the bullish narrative comes from. It comes from the fact that you have these like, and the treasury markets are doing the same thing. Actually, let's pull that up, and we'll take a look at we'll take a look at that as well. So
this is a really good indicator in terms of, you know, what's transpired over the last 12 months. I mean, it really does show, well, especially from December anyways, you know, from 0.2 to that 1.5. Yeah, absolutely. I see that.
So look, June 13th, that was like right when this big rally kind of started here, is the 30-year, or wait, this is the 10-year. The 10-year has just been like going down in yield. And it's important to remember that in bonds, when the yield goes down, the price is going up.
Yes.
So when the market, which again, US Treasury market is huge. It is absolutely huge. It is like the deepest, most liquid market in the world. And these yields are going down despite the fact that the Fed is raising rates. And so that's the market kind of saying like, look, this isn't going to be sustainable, this whole rate raising, and they will end up going back on their word. At least that's where people are putting their money at the moment.
Yeah.
Now, I've heard a couple bond people that are like, you know, normally I would listen to the market, but when it comes to this, so I think if you're looking for the bull case is that the Fed is going to end up pivoting. They don't really have a say in this. They're not really in control. They can raise the front end of the curve all they want, which is this stuff over here. Like they can raise these things all they want, and it's not going to change what happens out here. These are just going to continue to invert deeper and deeper, which is not good for the economy. And so, you know, that is the bull case right there, that the Fed has lost control. Now, the bear case here is that you've had 12, 13 years, basically since the global financial crisis, and you could actually probably even take it back further than that, since the market has had to really deal with higher interest rates. I mean, we've been the the global financial crisis is a good line to draw, though, because we've basically had low inflation and low interest rates for 13 years. So there's also a bit of like, how much has the market been Pavlov's dogged into, the sense that, oh, things are getting bad, the Fed's going to just turn on the money faucet again.
Mm.
And I don't think that there's a lot of evidence that that's the case. That I think the Fed's hands are sort of tied here, because if they go back without inflation rolling over, and actually, let me pull up the nowcast. Give me a second. I'll pull that up. So let's see. I can share this. Hold on. Share. Actually, I don't know how to share that one. I guess I'll have to pull it up on this.
When is the next meeting?
The next meeting is until September, technically, but there's also Jackson Hole. I don't remember the dates for that, but if you pull it, let's see. So you can see here that the August CPI. This is from the Cleveland Fed's website, and it'll give you kind of like, these are like a little bit, instead of waiting for the monthly CPI numbers to come out, this is kind of a more instantaneous value. It's an estimate, but these are pretty close to accurate normally. So like, as you can see, there's like no evidence that the CPI is actually rolling over.
Mm.
And so
when you say rolling over, you mean dropping.
Right.
Yeah,
and the thing is, like, inflation is still a huge narrative. It is still a huge narrative politically. And the Fed is a political organization, whether they want to admit it or not.
Yeah.
And so the way I see it, until inflation is not the dominant narrative, until unemployment is the dominant narrative, the Fed has to tighten unless something breaks. And even
so we're
then,
still on the bear case, right? This is the bear scenario. That's, you're still going through that now. Yes.
Right. Yeah, this is sort of more my base case, which sort of is, I mean, to some extent, is basically that the Eurodollar market might not be right about what's going on here. I don't want to say that it's definitely not right. So I'm not like 100% bearish, but the way I see it, the Fed has no room to move here until those inflation numbers roll over and start getting back down towards, 4, 3. Like, once they're down there and unemployment is actually the problem, they are not going to have the ability to pivot. And so I think they might have to do some sort of shock and awe, like where they just, sell off a bunch of treasuries or something into the market just to like really get it to heal.
Yeah.
But I don't know. Like, I'm not making definitive predictions here, but that's the way I see it, is that unless something breaks, and then they have to just put that fire out, because that's basically all they're good for, is putting out fires. Until something breaks, and even then, it depends what breaks. Like,
so my question is going to be, what scenario of breakage is possible in this? Because at the moment you're speaking in hypothetical terms. I mean, that's what it sounds like. I know you're not, but it's in terms of understanding, what is like almost like a worst case scenario of breakage. I mean, what could happen, and what do we see from that?
Here's another thing to look at. Is this is the move index. And as you can see, so let me explain what the move index is. It's basically like the VIX for bonds.